died. Telling everybody that I'm starting another live. So I'm on a second live here, and Lisa J. Stocks just came into my other live, which died. It just died. So I'm trying to type in a chat for the other live. I don't know if people are still in that live. So somebody came back to this one, and I got one thumbs up. I don't know how many thumbs up I had in the first half of this live. But we only have 20 minutes left, so we're going to try to finish this out for the next 20 minutes. But yeah, my phone just totally dropped the live. And that's the first time this has happened, where it's totally dropped live. I'm on Wi-Fi, so normally my Wi-Fi doesn't do this, but today it did. Hi, Lisa. I've been talking about you earlier, and I'm talking about you now because I'm going through questions that I've had about the stock market. And then we'll be going to your live as soon as my live ends. So there are, and Lisa will talk more about stuff like this in her live on different days. But I invest in the S&P 500 because I just want simplicity. You know, one of them is VOO, VOO, with Vanguard. I do invest within my retirement accounts in high growth mutual funds because I'm never ever going to touch that money. That money's going to sit there for the next 5 years, 10 years, 15 years. So if I'm never going to touch it, I want the most growth possible. Now, having said that, now that the stock market is down, I'm having big losses with those particular funds. I don't care. I don't care what happens in the stock market today, this week, or this year, because I don't need the money. If I ever did need the money, it'd be 10 years, 15 years from now. So I won't even remember 2026 in 2036. I won't even remember. So that's just me. I said it and forget it. Some people in the FIRE movement say VTSAX and chill, right? I'm not into that particular fund, but I chill with my stock market portfolio. I just chill. I want to add more to it in the future, but for right now, it's just chill. And I can sort of see the comments a little bit. Yes, I'm not sure who made the comment, most likely Lisa. I'm just sorry, I can't see very well on my phone, and I don't have it on my studio over here. But unrealized losses, that's right. The losses that I'm seeing today don't matter because I'm not selling the stocks today. So I expect that that money will come back. And not only that, I was putting money in as the stock market was going down. So I'm going to catch all the upside with the money that I put in. And I've seen strong bounce backs when I've done that in the past. So, dividend aristocrats. Now, this is just my understanding. Dividend aristocrats are companies that have had dividends for a long number of years or increase their dividends annually, right? So these are like the top companies, Coca-Cola or stuff like that have had very strong dividends for, let's say, more than 25 years. So don't quote me on any of those, but that's just my understanding. You know, I know that there are technical items that make someone either a dividend king or a dividend aristocrat. I don't play in the dividend space, you know, and like I said, I have friends in Canada who retired early and they travel the world with just backpacks. I mean, they're just all over the world. They can live off of their dividends. They sold their home in Canada, and I'm sure that they invested all that in the stock market. Plus, they had a huge stock market portfolio before they sold their house. So all of that money gives them 1 million, 2 million, whatever it is they have in stock to get the dividends. And so you can live off of dividends if you have a lot of money in the stock market. You can do this. I don't have a lot of money in the stock market. As you all know, I'm sitting around 136,000, so I am nowhere near having a lot of money in the stock market. I mean, 1 second, I'm trying to get to my thing here to scroll my screen. I have no idea. I was asked, how do you read stock market data? I don't, because it's like my rental properties in that I don't want to manage my stocks. I don't want to read the P/E ratio and say it's time for me to sell. It's time for me to buy. I don't. I dollar cost average the same way that I dollar cost average into my retirement accounts via my college paychecks. I just keep buying. And that's another channel says this, always be buying. That's it. I don't care whether it's $5, $2, always be buying on a regular basis, whatever regular is to you. If it's once a month, it's once a month. And so I'm so sorry that I can't read all of the comments. So I see CL Fantasy Waves is back. Thank you for coming back to my second half of my live. But I have this ring light behind my cell phone, makes it so you can't hardly see the cell phone. And so, but again, yeah, Lisa is here. Lisa is the stock market person. So if you have stock market questions, we're going to get to that. But in the last 15 minutes, because I've now talked about, the last question was the wealth gap, right? Now, we all know that there is a wealth gap in America between various ethnic groups, whatever they are. We've known this forever. It's just always been here in America. And so my goal is to close that wealth gap. You know, I don't care who you are. We start from having nothing, like me, and we build wealth on my channel. Whether you do it in real estate, the stock market, a combination of the two. Because it's not either or. It's how can I have both? See, because I'm building my portfolio in my retirement accounts with my colleges, but I'm also building a real estate portfolio. And now I'm in my mid 60s. So now I am at a point in life which is different than when I was 40 and 45. I was building for retirement. Now I'm in the wealth preservation stage. So now I'm working on getting an umbrella policy to cover not only me, but all of my real estate. See, I am in the wealth preservation stage. So there is Oki's Eden, right? You guys have heard of him. I'm sure some of you have. He's a gardener. So I've been planting the seeds for wealth over the years, and it's time to harvest the vegetables and the fruits of my labors. That's the short, easy way to do this and say this. So, and now I've lost my green screen background that I had in the last one, but we're not going to try and hit the buttons again because I messed that up in the first live. I hit the wrong button. It started a poll or something. So, in the last few minutes, because I've talked about everything that had questions from some of my subscribers. And I'm so sorry that I can't see how many people are here. It just, the white light behind the phone is blinding for old eyes. There you go. So what I wanted to talk about was celebrating failure. Right? We've talked about some of my subscriber questions about how you start in real estate, if you just want to start slowly or you're in a little bit of fear about, the risks of real estate. And there are risks. There are absolute risks, but there are safe ways to start. And house hacking is a very safe way to start in real estate. And many, many people do that to get the capital to buy something they really want later. So anyway, let's talk about celebrating failure. I talked earlier about having lines of credit in case of a real estate emergency. Well, I have a huge IRS tax bill, and I don't know the exact amount. However, I talked to my tax person. I'm with a new CPA firm that focuses on real estate investors. That's their specialization. And so I talked to them the other day, and I am going to owe a massive amount of money to the IRS, the federal IRS, and for the first time, a massive amount of money to the state. So, what did I do yesterday? I called the state and I said, because we have a state tax office right here in my town. And so I called them up and I said, okay, how do I pay you guys? And so, luckily, I have been saving an emergency fund in a high yield savings account. And some friends of mine got me started on that. And so I just put money in every time I get paid or every time income comes in because I have multiple income streams. I put a little bit into this high yield savings account. So the question was, do I pull money from a line of credit or do I use my emergency fund from my high yield savings account? And so what I'm going to do is I'm going to use the cash from my high yield savings account rather than go into debt more with my line of credit to pay the state because the state is a lot less than the federal government. Now, that takes care of the state. And I want to pay them because, as I told you, I'm traveling here in April. I want to pay them next week before I leave and start traveling. And so I will be going up to Maryland to visit a friend of mine who is just finishing chemo, right? I'm going up to visit my friend. And then I've got some old motorcycle buddies up there that I used to ride with when I was in a club up in Maryland. And so I want to see them because they're getting older. So, friends, I'm coming, you know. But after Maryland, I'm going to be in Charlotte. I'm going off topic from my IRS story because I don't want to tell y'all. See, this is what happens when I don't want to tell you guys the truth. I go off into another story. So we're coming back to the IRS. But anyway, after I go to Maryland, then I'm going to Charlotte, North Carolina, because I have friends there. And I also have friends coming from California to Charlotte. So I'm going to see a bunch of friends there. Then I'm going to Asheville, North Carolina, because I have a friend there. Then I'll be coming home. So that's my trip, right? Is for the next 3 weeks I'll be traveling. Let's get back to the IRS. So I've taken care of the state because I have the cash to pay them. Now, I need to replenish that high yield savings account. So let's not get it twisted that the money's just gone and it'll never come back. So with the IRS, I will have to go into one of my two lines of credit. And so I have one that I don't owe any money on at the moment. And so I'm going to wait until April 15th and then write the IRS a check and pull the money from my line of credit. And the reason that I call this celebrating failure is because I knew when I took money out of an IRA at the beginning of the year, I knew at the beginning of 2025, I knew that I would owe taxes on that money. And I chose not to pay the taxes at the time because I said to myself, Daryl, you can pay the taxes throughout the year to the IRS. Well, life lifed, and that didn't happen. So that was a failure on my part. But the reason that I'm celebrating failure is because I will not do that again. See, I'm starting some different financial, routines is what I'm going to call them. And one of them is putting money aside, just like I've been building my high yield savings account. I am putting money aside every time income comes in from one of my income streams. And just like I'm paying down debt with the money that comes in from my various income streams, I will be putting money aside for taxes, putting money aside for property taxes. See, this failure I'm celebrating because I'm adulting after this, because I'm learning. It's only a failure if you just keep doing it. But if you change and you start changing your habits, which is what you all will see with me for the rest of 2026 and going into 2027, I am going to be in a much better, stronger financial position. One, you guys have heard me talk about paying down my debts. And I am looking at the clock and it's showing, let me look over here. Oh my, 11:09. Okay, we've still got some few minutes here. So celebrate the failures in your life because we all fail. None of us does this thing perfectly. I had a great plan for 2025 that didn't happen. I'm blessed to have a line of credit that can cover me to pay the IRS. Now I have to replenish my high yield savings account. I have to pay off this line of credit. I have another line of credit that I'm paying off already. See, so you guys will see me in full debt pay down mode every single month. You know, and I'm blessed that I talked in my end of month for March that I paid off 7,000 in debt. Well, I hope to pay off 5,000. Maybe not in April because April I'm traveling, but on average, and because my income varies, right, with rental income and teaching income, it all just goes up and down. I do not know how much I'll pay off every month, but I have a goal. And the goal is at least $5,000 a month towards all these different debts. And if I can do that, then I could be consumer debt free by the end of 2026. So that's a goal. Have financial goals. If you have a financial goal for 2026, put it in the chat. Maybe it's just to start dollar cost averaging in the stock market. I also have the health goal of walking 1 mile each day in the month of April, whether I'm traveling or not traveling. And normally when I'm traveling, I'm not exercising. However, because I'm in this challenge with 60 plus and Sophie, then I'm now in this thing, so I'm going to walk 1 mile. And that will also keep me focused because while I'm out walking, I can tell my money where to go before it comes in. See, in my calendar, I have all my paydays from the various colleges. And one college only pays once a month, but I won't have that class until summer. So I won't see that money till July and August. So not even going to worry about that school. The other two schools pay every 2 weeks. Because they pay on opposite weeks, I should be getting money in every single week. And then once a month, I'll get in my pension. Once a month, I'll get in Social Security. But every single week, I should be putting money towards debt pay down. And that really helps. That really helps to keep the interest as low as possible. But again, celebrate your failures. You know, sometimes, like when my rental properties have problems, I have to celebrate the failure. You know, I have a lot of equity in my rental properties. So I'm not saying go out and get rental properties and owe 90% on your rental properties. No, pay that debt down so that if the market drops and the value of your rental properties drop, you're not forced to sell. I do not see any of my rental properties dropping 50% in value. I just don't see it. They have doubled in value. I've seen that, but I do not see them dropping 50% in value. And so what I have to do is first pay off my consumer debt, then pay off my rental properties. So that is the future of my channel. And that's what you all will see on my channel over the next 5 years. Because this is not a 6 month and we're done thing. Those people that pay off all their debt in 5 months, 6 months, bless them. That's just not me. And so That's what I want you to do for the month of April, is think about celebrating your failures and think about how you can start to attain your future life's goals. And my future life goal is debt free, have all that income that I get every month, and be able to keep it and spend it. Because I want to go to Ecuador, I want to go to Costa Rica, and I'm telling you, dream of dreams is I want to be on one of those huts out in the water in the Maldives where you can see the clear water below your little hut. They have what is it? Some now if you get the really fancy ones, you could have like a private chef and a butler, at your little, and they're not huts, whatever they are. They're like little condos out over the water, but they're in the Maldives. And I just want to travel there. I want to see it for myself. The pictures are beautiful, but that's a dream. And so I have a habit of living my dreams. And so that's what I want to charge you with. We are at 59 minutes here, according to the counter from when I started. And yes, at 11:15. So I'm going to stop this second live, and I'll just have 2 Friday lives this week. But I really want to charge everybody with going out and living your dreams. Hi, Homebody Trish. I could barely see your name, but thank you so much for coming. And so live your dreams, but plan your future. So remember, just because I came from being homeless does not mean I can't go to the Maldives and have a butler. So never let your past determine your future. See you all next week, and hopefully I'll have better Wi-Fi and it won't cut off in the middle of my live. Bye, everybody. Have a great April.